and welcome to Safe and Secure Retirement Television. I'm your host, Paul Gebhardt, with our guest today, Jordan Flowers of Wealth Financial Securities and Tax Advisory. Good morning, Jordan.
Pleasure to be here, Paul. I'm doing fantastic.
Well, thank you for being here today. So today, we're going to help the audience with all things retirement, right? And
yes.
all the questions that pretty much are lingering in everybody's mind out there these days.
A lot of questions out there.
Yeah. The first thing I had for you, what makes you different? What do you do that's really separating you from other advisors?
That's a great question. I think at our firm, we're not just about investments or helping you out with tax planning, but we do everything comprehensively in our firm. We actually name the process because most advisors, they just do money management.
Yeah.
We call our process a safe and secure retirement roadmap. And basically, it goes over all facets of your financial plan and your retirement plan. We break it down into kind of 5 separate steps. One is income planning. Retirement is not about how much can I make, it's now about how can I work off those assets that I worked so hard to accumulate over the last few decades. So we got to make sure we have an income plan that kind of encompasses Social Security, if you have a pension, your IRAs or 401ks, to make sure that you can never run out of money and you're in the best place possible. So after looking at income planning, we kind of look at risk analysis and investment analysis. Many people today don't even realize how much risk they're currently taking. So we break that down into a separate section there because we want to show people where they're at. Hence the roadmap. We have a compass.
Yeah.
If you're in the woods, you know, how do you know what direction to go unless you know where you're at now?
No
right?
doubt. Absolutely.
So we want to show people first where they're at today.
Right.
And then once we know where they're at and they know where they're at, then we can show you maybe you want to take a little bit less risk or maybe you should take more risk depending on your situation. But we want to look at that. Also, we want to look at their fees. Some clients don't even have any idea what they're paying in fees. Now, fees are not necessarily a bad thing, right?
Right, sure.
If I go to the doctor, I don't want him to do my brain surgery pro bono. You know, I want him to get paid. Okay?
You get a little worried if he does it for free.
Yeah, first surgery, I feel real confident before they put me under. You know, it's like no, and, you know, fees are not a bad thing, and we want to make sure clients know that they're paying their fair share in fees and know why they're paying the fees. What value is their current advisor giving them? Is he talking about taxes? Is he talking about Roth conversions? Is he talking about long-term care and estate planning? If he's doing all that, great. You should be justified the fee. But what I find over the last few years is many advisors, they kind of are stuck in the old way of doing things that just focus on investments. Investments are important, but vitally important is having a tax plan.
Yes.
And that kind of brings me to the third subject in our safe and secure retirement roadmap is having a tax plan. It's so vital. Many people think when they do their taxes that tax advisors kind of helping them on their taxes.
Yeah.
But sometimes those CPAs or accountants are just really good history teachers. They kind of look at what you did last year,
right,
and say, hey, this is how much you owe or this is how much you get back. And that's called tax preparation. And don't get me wrong, in our office we do tax preparation over 1,000 returns. That's good that we do that and the people that do that, but more important than tax preparation is tax planning, looking ahead. As you, Paul, do you think taxes are going to be higher or lower in the next 5 to 10 years?
Yeah, definitely I would say higher.
I would agree with you on that.
Yeah.
You know, in 2025, at current laws, the tax rates are going to sunset, and in 2026, it's going to go higher. But I personally believe, it's not in law yet, but I think taxes are going to be a lot higher even sooner than that.
Right.
Because we have national debt.
Right.
We have all these stimulus checks that went out. Somebody has to pay that. That stimulus check, even though it wasn't taxable, is not free.
No.
Okay, in the next 5, 10 years, we're going to be paying that back and even more. So tax planning is so vital for people. So we want to make sure that we create that tax plan for our clients. The last step, and I'll actually just pull out the roadmap too, it actually folds like our roadmap, believe it or not.
That's cool. I really dig
that. The last step, or the next step I should say, is estate planning. Okay, some of our clients have done very well for themselves. They accumulate millions of dollars. They're not looking to run out of money. They're in a good position. But now how do you transfer that to the next generation? How do you make sure you transfer them in the most tax efficient way?
Yes.
You know,
You're talking about a legacy strategy.
you got to have a legacy strategy, absolutely. Because if you don't have a legacy strategy, if you can just Google and say
Right.
all these famous people and they didn't have a trust in place, they didn't have a plan in place, and all that money went to the courts, it went to the IRS, and it didn't go to who they wanted as a beneficiary.
Well, you know what's funny about that? You mentioned that, and it's one of my favorite artists that I grew up with.
Yeah?
Matter of fact, I think it's going to be the 5th anniversary of his death on Wednesday. Prince
Oh, yeah.
had a situation just like that.
Absolutely, yeah.
And that's incredibly costly to an estate, right,
It's
Jordan?
huge. And again, some people, they're like, when I pass away, I don't care what happens to the beneficiary. I don't care the money. But if you love your family, if you care about your family, you don't want them to go through the headache of trying to organize all the documents and go into courts and go into probate. You want to make sure you have an effective estate plan in place if you love your family. So we try to make sure our clients have an estate plan, their legal documents are in order, their powers of attorney are in order. Just recently, the pandemic, people couldn't, when it first started, people couldn't go to the hospital with their spouse or their loved one.
I know.
And having powers of attorney, especially for healthcare, and making sure your healthcare power of attorney has access to that is so vital right now. So we want to make sure that all your legal documents are in order so everything transfers smoothly and tax efficiently to the next generation. But the last step bringing to the roadmap is healthcare planning. Because you might do great planning, your assets might be going really high,
Yeah.
but what if you go into a long-term care facility?
So true.
Many of my clients have experienced that for their parents.
Yeah.
They've seen what they thought they were getting as an inheritance, and it quickly dwindled away or almost was eliminated due to long-term care costs.
Right.
So we want to make sure that we have a plan for long-term care. I know in later segments we'll go in more detail on that. But having a healthcare plan, having a estate plan, having a tax plan, looking at your current risk, market's up.
Yeah.
Okay, is it going to continue to go up?
Right.
We don't know. But
Yeah.
if I'm at the casino and I'm up really big, I don't gamble, by the way, but if I ever did, I'm up, I probably would want to take some money off the table when I'm up.
Definitely.
But as human beings, we have that greed, so we sometimes like, how much more could it go? You know. So we got to evaluate the risk and what's going to affect you. But overall, you need to have an income plan. You need to have a retirement plan, and we call it our safe and secure retirement roadmap.
I love that retirement roadmap because someone can come back and reference, where they are and updating. And I think that's one of the things you touched on, the importance of our life is always changing, right? People get busy.
Yeah.
They're planning weddings. There's a graduation
Marriages,
coming up.
yeah.
There's all these different things in our lives, and sometimes we don't realize the impact on a retirement plan.
Every 2 to 3 years, you need to review your estate plan. When the tax laws change, you need to make a change, but you can't change something if you don't have a plan.
Boy, that's so true. So I understand you have a special offer for the viewer today.
Yeah.
Would you mind sharing that with them?
Sure. Many people, when they first come in and see us, they have questions on Social Security. When's the best time to take it? Or they want to know, how can I get income that I can never outlive? Or they say, Jordan, how can I avoid the next market correction? Well, by coming into our office and scheduling an appointment, we can create a safe and secure retirement roadmap for you and your family. You just have to call 866-499-3454, and I will sit down with you personally and see if we can help you put you in a better place for your retirement and financial future.
Yeah, beautiful stuff. Listen, this can be a life-changing event, meeting with Jordan and his team. We have to take a short break, but I'm excited for our next segment, so stay with us. We'll be back after these messages.
Hi, I'm Jordan Flowers. I've been with the Wealth Financial Services and Tax Advisor for over 15 years. I grew up in the Chicagoland area, and I've lived here ever since. As a fiduciary firm, we take a personal interest in making sure that you are taken care of. How do we do this for our clients? Well, we create for you a personalized retirement income plan so you see exactly where you're at, where you're going, and how we can get you there more effectively. I will show you your safe and secure retirement roadmap, an income plan to maximize your income, but also minimize your taxes. And we'll talk about what we may recommend and see if you're comfortable with the risk we're proposing. Depending on what your needs and your goals are and how simple or complex you would like me to go over the plan, I will curtail it to you personally. Some people like to go into the details, and I'm happy to do that. Some people just want to know that they're going to be okay. My goal is to make sure you have a safe and secure retirement retirement. And whether we want to go into more details or less details, I want to make sure you're comfortable with whatever decision and whatever plan we implement. If you're focusing on your investments every single day, you're not enjoying the longest vacation of your life. Make sure that your risk is in line with what your goals are. When someone becomes a client of ours, we take that very seriously, and we look forward to working with them and their family for generations to come.
Hello and welcome back to Safe and Secure Retirement Television. I'm your host, Paul Gebhardt, with our good friend today, Jordan Flowers. Jordan, incredible opening segment.
It was a lot of fun.
Yeah, I love that. I loved your referencing of a roadmap and how important it is, because all along the way through life's journey, we got to have a strategy, and sometimes we might get off track.
Absolutely. We need to make adjustments in that strategy.
Got to make adjustments to that strategy. You had mentioned something in break about that you're a fit advisor. Would you explain what a fit advisor is?
And I don't mean physically, okay, Paul, because I should probably eat a little bit better, okay?
Who are you talking to, right?
Yeah,
I got my COVID weight on.
It barely buttons, okay? But what I mean by fit is actually a fiduciary.
Yeah.
Independent and tax-focused. And I believe anyone that's watching today, they should work with somebody that is a fiduciary, okay? Work with somebody that's legally bound to put their interests ahead of anything else.
Well, you'd think that would be the norm.
You would think, but unfortunately, there's people out there today that work on a suitability standard, and then there's people that work on a fiduciary standard. It's just high level. You know, say you had someone that was recommending a product that had 2% in fees. It might be suitable for you, but if you can get an investment that has 1% in fees, what is in your best interest?
Absolutely.
So there is a suitability, kind of line there, and there's a fiduciary. So we work under the fiduciary for investment management. We want to make sure we always put our clients' interests ahead of anything else. And not only does that benefit the clients, but by doing good to clients, they tell their friends, and we have a lot of referrals, and I'm very thankful for that.
I love that about you. In the break, we actually talked, and you mentioned something I thought was really powerful, the importance of listening.
You got to. We have 2 ears and 1 mouth. You got to know what people are hearing and know where they're coming from.
Right, absolutely. And how can you learn about somebody if you're not willing to listen to what their situation is, right?
And we're not cookie cut. Everyone's situation is different. We got to make adjustments. You got to hear that people are like, what should I bring? Just bring yourselves to that first appointment. I got to get to know you better, and then we can see if we can, help you out and take your financial vitals. I
love it.
But going back to the fit, okay? The I stands for independent. Okay, some people work for the big box firms, and think about that. If someone works for, not going to name any names out there, right? But if they work for a big box firm, that their manager or upper management is trying to have them sell maybe a product or get some money in this investment, where they're not very loyal, or usually they're not very loyal to the company because they want to make a living, right?
Yes.
And they might be trying to sell you something potentially. But being independent like we are, we work with all different insurance companies. We work with all different types of investment management companies and funds. We want to make sure we're doing the very best for our clients so they're in the best place possible. A kind of a simple illustration out of our industry, if you go to a Mercedes dealership, are they going to say, based on what you told us, that BMW out there is the better vehicle for you? Just drive down the street. So glad I could help you.
So true.
They're not going to do that, right?
It's interesting you're bringing up this topic. My wife and I was talking about this the other night. The difference of, when you feel like you're being more pressured or steered a direction, there's typically quotas behind it, right?
Yeah.
And that's
end of the month.
Absolutely. So I think it's refreshing to know that you do. It's all about your client's best interest. That's crucial. That's very important.
If it benefits them, great. And the last thing, just about that, fit, tax focus. Financial planning and tax planning need to work together if you want to maximize all those hard-earned dollars.
Yes.
You should not worry about how much can I make if you're going to have to pay all that back to Uncle Sam and the IRS later.
Absolutely.
Pay the least amount of taxes over your lifetime is my model while you maximize your income. So we want to make sure, yes, we do tax preparation, but for our financial clients, we do tax planning. We're looking, September, October, should we do that Roth conversion? Should we look at future capital gains? And they might change some of the laws in the near future. We want to prepare for those changes ahead of time, not wait till it's too late and get blindsided by increases in taxes. And taxes have to go up. We got a plan today.
I love what you're talking about, the tax strategy portion of this, because some people, I wonder if that's not a piece of the retirement puzzle that's missing.
Yeah.
They feel like my taxes are my taxes, Paul. You know, this is what I got to pay. I'm not going to mess around with the IRS. And they don't realize, though, there's very usable tools to be proactive in tax strategy.
And Paul, you know, the most common question I get sometimes when someone comes into my office is, you know, my financial advisor, I kind of like him. He's done all right. I mean, the market's done all right the last 10 years. You know, it's hard to do bad, okay? But he doesn't talk about taxes with me. He doesn't have strategies for me. And I say, you know, if you love the guy and he's your brother and you have your best friends, going to the golf course every weekend, that's okay. You may never change. But from a business standpoint, if you're not talking about taxes and doing planning today, whatever you think you grew is not 100% yours.
Right.
You have $1 million on your statement. If it's an IRA or a 401k, I tell people you don't have $1 million in your statement because you haven't paid the tax debt on that. So that is crucial. You got to look at tax planning with your investment management and make sure they work well together.
Yeah. You know, you mentioned that. So a lot of folks may have an advisor or somebody they've worked with. Maybe it's a family friend, maybe a coworker. The importance of having just a second opinion, maybe get an objective view. What do you think about that?
You don't know what you don't know. You know, I'll be honest, when I first saw the FedEx logo, I never knew there was an arrow in it. One time, probably decades ago, someone's like, there's an arrow in that FedEx logo. And I'm like, now, every time I see FedEx, I see that arrow.
Jordan, guess what I'm going to be looking for?
The arrow, right?
I didn't know there was an arrow in the logo.
Next time you see one, you're going to see that arrow. So you don't know what you don't know. A second opinion is not going to hurt. You know, we just like to have a conversation. If we don't do business, that's okay. But if we can help you and put you in a better place, that gives me joy and satisfaction. I love my job. I have a passion for what I do. And I want to make sure my clients or future clients are happy with our relationship, are in the best place possible, and they don't pay more to Uncle Sam unless they want to. That's their decision.
No, that's good. I get the sense when we talked that you really want your clients to feel like they're an extension of your family, really.
We have a financial family, you know. Obviously, I say sometimes we marry our clients, financially speaking. We see them for taxes. We see them for investments. We see them throughout the year in educational events. We have fun with our clients. We usually do client appreciation events and do big galas and do movie theater rentals. With the pandemic, we haven't been able to do that as much, but I am just amped up. When this whole thing is done and we can get together in big groups, I would love to get back with my clients and actually be able to see them face to face without a mask.
Absolutely. And mingle with them and get to know, because that's what it's about. You know, how can you help someone on their retirement roadmap until you take the time to get to know them, and then them to take the time to get to know you?
You need to have the right financial advisor and the right plan. And relationships are important. And a lot of people may already have an advisor. They have a strong relationship, but you also got to factor in that business relationship and the business value. Are you going to benefit your family, or do you want to just keep that relationship? So we want to have both if we're a good fit.
I like that a lot. I wanted to ask you a question. I had a viewer question that come in. How concerned should people be nearing retirement about their RMDs?
RMDs are huge. We can almost talk about a whole segment on this, okay? RMD stands for Required Minimum Distribution. And if you don't know what your RMDs are going to be, right now with the Secure Act, they push that age to 72. Which means at 72, you take the values of all your IRAs or 401ks on December 31st, the year prior. They have a division factor, and based on that division factor, you got to take out X amount of money. Now, if you don't take it out, what happens? People don't need the money. What if they don't take it out? Do you know what happens, Paul?
I don't.
They actually have a penalty. And it's the highest in our tax code.
Wait a second. You get penalized for money that you haven't taken on a required withdrawal?
Correct. The government wants you to take money out, and if you don't take it out, you get penalized at 50%.
Wait, half of the money?
50%.
50% of that?
But on top of that, it gets worse. Say you forget and you don't need the money, and you take the money a few years later, they give you a 50% penalty, but it's still taxable. What if your tax rate is 25%? Add that up, 50% penalty, 25% tax rate, 75% of your IRA and that RMD couldn't be going to you, it could be going to Uncle Sam. So we want to make sure we plan for RMDs now, and we're not missing till it's too late. So there's a lot of tax strategies we can prepare for, because we don't want our clients to be 75% of their IRAs going somewhere else or going to Uncle Sam.
Man, that's valuable, incredible information.
Huge.
We're going to have to take a short break here in a minute, but would you mind sharing with the people how many slots you're offering today?
Sure.
Yeah.
So if you are interested in meeting with our firm and creating that safe and secure retirement roadmap, we have 10 callers that we will take appointments over the next few weeks and sit down with you personally and create that safe and secure retirement roadmap, see if we can help you, get to know each other, equate it to a first date. We'll just talk and see if we can put you in a better place. I look forward to seeing you guys soon. You just got to call 866-499-3454.
What an incredible offer. Again, that's complimentary. I've seen a lot of places charge $1,000 to $1,500 for that service, so that's incredibly generous. Again, 866-499-3454. Give Jordan and his team a call. We're going to take a quick break, and we'll be right back after these messages.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just a downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
Hello again, and welcome back to Safe and Secure Retirement Television. I'm your host, Paul Gebhardt, with our friend Jordan Flowers of Wealth Financial Services and Tax Advisory. Listen, that last segment was pretty fascinating, you know, the RMDs.
Yeah.
So how do we strategize, you know, when we're taking more on the RMD front? How do we plan for something like that? How do we maximize our return?
Yeah, I know we had to go to commercial there because there's so much we can talk about on RMDs. Well, one thing is when you have a required minimum distribution, that only applies to traditional 401ks and IRAs. It does not apply to Roth IRAs or Roth 401ks.
Okay.
But just to take a few steps back, let's think about this. Why does the government force us to take money out of these retirement accounts? Is it because they want you, Paul, to go on vacation, enjoy life, buy that Mercedes we talked about earlier?
Well,
right?
It should be that.
It should be
I
that.
work for the money, right?
Yeah, but it's not. The reason they force you to take money out is because those funds have been deferred for 20, 30, maybe 40 years, and now they want you to pay taxes on that. So they want you to take that money from a tax-deferred account and pay taxes on it. The difference is if you have money in a Roth 401k or a Roth IRA, you don't pay a dime in taxes on that. Okay, so we talked a little bit about the Secure Act. The Secure Act kind of moved that RMD to 72, but there's a few more changes that I just want to make sure the viewers are aware of. You used to, for a traditional IRA, be able to stretch that if you died to your children or even grandchildren over their lifetime for 30, 40 years. What did that do? Well, that minimized the taxable impact, so you're kind of giving your grandchildren a gift for the next 30, 40 years, and they're paying little taxes on that. But the Secure Act, which isn't all that secure, I'll be honest. When the government names something secure, you got to scratch your head. Let's read a little bit more on that,
Yeah, you want to second guess it a little bit.
A little bit there.
Yeah.
So what it has done is change all the rules where now when you get an IRA inheritance, just to be clear, spouse to spouse, you can take the spouse's IRA into your name, not a taxable event, it just takes into your name. But when both spouses pass, that IRA has to now be distributed over a 10-year period of time. So if you don't take it out in that 10-year period of time and say the kids don't need the money, they wait, year 13, they take out the distribution, guess what? There's another penalty. And what is the penalty rate?
No.
50%.
Oh,
and then they got to pay more taxes on that. And what people don't realize is that same 10-year runoff for the Secure Act, when it comes to an IRA, it also applies to a Roth IRA. Even though a Roth is tax-free, The beneficiaries, after the spouse, have a 10-year kind of a runway where they have to take distributions out. If they don't, they will pay a 50% penalty. So this is crucial. Even though the Roth is tax-free, you got to make sure that your children and your family members are educated. Otherwise, you might pay 50% penalty on a tax-free Roth IRA. But how do you get a Roth IRA? There's so many rules with Roth IRAs.
Right, exactly.
Okay?
Most people don't think they can qualify for one.
This is true, but there's a lot of things that we can do to help them. So just to kind of go backwards, what is a Roth? Well, when you put money into a Roth, you're paying, I call it the tax on the seed. You're paying the taxes now, and then all that growth is going to be tax-free forever. When you put money in a traditional IRA, you get a tax deduction this year while taxes are on sale, and then you pay the tax on the harvest when you take the money out. So you can contribute to a Roth IRA in your 401k and in your IRA if your income limits aren't over certain thresholds. So that's how you put money in. And when you put money into a Roth, you have to wait after the first contribution at least 5 years to take advantage of the tax-free treatment and be 59 and a half. Now, the difference is if you already have a lot of IRAs and a lot of people watching like, I should have done that Roth, you know?
Yeah.
It was back in 1998 where it was instituted, and if you didn't do that, that's okay. We can still help you. Because a lot of people have a lot of money in IRAs. We can take money from the IRA and convert it to a Roth. The year you convert that, though, you got to pay taxes on that money. Okay, so you got to be careful. You don't want to do it all at once, but over a few years, you can move more funds from an IRA to a Roth IRA. But I caution people, what they have to realize is every time you do a Roth conversion, say you convert $100,000, now you have to wait an additional 5 years after that conversion to take those funds out tax-free and be at least 59 and a half. So we got to have, there's a few 5-year rules. When you put money in, contributions, and when you take money out and you do the conversion to a Roth, you still got to wait an additional 5 years. But right now, everyone should at least be considering a Roth IRA. If it's not for yourself in your lifetime now, your beneficiaries want Roth money. They don't want your IRA money because they're going to be paying a lot of taxes on that money.
Makes total sense. We don't have a whole lot of time left, but I want you to briefly talk on life insurance options in an RMD.
Yeah, life insurance. So if you have an RMD and you don't really need the money, instead of putting that in your checking, making nothing, or reinvesting that and taking a lot of risk, you can use that RMD, whatever that threshold, buy a life insurance policy with a tax-free death benefit to offset the taxable gains to yourself or your family.
That's a wonderful strategy. Wonderful strategy. I like that idea. You'd mentioned that in the break, and I just had to bring it up.
Yeah, I appreciate that.
Well, listen, we're about coming to the end of our show. Can you share with us again what you're offering our clients today?
Yeah, I encourage you all, if you want a safe and secure retirement roadmap, if you want to know that you're going to have peace of mind in retirement and maximize all your income and minimize your tax liability, you got to give us a call. And we look forward to talking to you soon. 866-499-3454. I hope to help you soon.
Thank you so much, Jordan, for your time today. Listen, I guess there's just one question left. What do you want your tomorrow to look like? Find out today by giving Jordan and his team a call. 866-499-3454. Thank you for being with us. Stay safe. Take care.